Warning: you need to see this before making another transaction. A massive security breach is targeting crypto wallets, with hackers swapping addresses to steal your funds. We're breaking down exactly how this supply chain attack works and what you must do to protect your portfolio right now. While this threat is live, the market is at a critical turning point. Bitcoin is coiling up for a potentially explosive move, holding above the key $112,000 support level. Institutional money is pouring in, with major banks increasing their positions, and a Fed rate cut is expected on September 17th, which could light a fire under the market. Is Bitcoin about to break out towards $120,000, or will the security news cause a panic sell-off? The next few days will be absolutely decisive for your crypto investments. In the latest video from Altcoin Daily, the channel kicks off with an urgent security announcement for all crypto users. A widespread wallet malware is causing havoc by changing deposit addresses at the last second, leading to stolen funds. The advice is to be extremely careful, double-check every transaction address, and hold off on using hot wallets for now. The focus then shifts to a very bullish prediction from Tom Lee on CNBC, who believes Bitcoin could easily reach $200,000 by the end of the year. He bases this on the historically strong fourth quarter for crypto and the likelihood of the Fed cutting interest rates in September, which would likely boost equities and, in turn, crypto. Lee also suggests Ethereum is set to perform well. Following that, Michael Saylor appears on CNBC reacting to Lee's forecast. While not as direct with a year-end price, Saylor confirms that most analysts have price targets north of $150,000 for Bitcoin. He also announced that his company just purchased another $217 million worth of Bitcoin. The video also touches on the positive sentiment from major players like BlackRock and the push from the House GOP for the Senate to approve the Clarity Act, which would provide clearer rules for the digital asset market. The video's discussion around a $200,000 Bitcoin price by year-end feels incredibly optimistic given the current climate. As of today, Bitcoin is trading around $112,000, meaning it would need to nearly double in under 4 months. While Tom Lee's point about Federal Reserve rate cuts is valid, the market has largely priced in a September cut, with weak labor data solidifying those expectations. The real question is whether that will be enough to ignite the kind of explosive rally seen in previous cycles. In the latest video from Crypto Rover, the host explains that Bitcoin is forming a falling wedge pattern, which typically signals a future upward movement. He became bearish when Bitcoin's price fell from $118,000, but started buying back in as it dropped to $110,000. For him to be fully confident in a continued bull run, Bitcoin needs to break above its previous high. If that happens, he sees it going to about $123,000 to $124,000. He also points out a CME gap around $116,000 that he thinks will likely get filled. He's currently holding $20 million in long positions on both Bitcoin and Ethereum and has no immediate plans to sell. The video also discusses the beginning of Phase 3, a period where money starts moving from Ethereum into other altcoins. He notes that the decreasing funding rates for Ethereum suggest that the current rally is more sustainable because it's driven by actual buying rather than speculation. His price target for Ethereum is around $6,000. The video's analysis of Bitcoin's falling wedge is a classic technical take that often suggests a bullish reversal, and it's a pattern many traders are watching. The host's price target of $123,000 to $124,000 is ambitious given the current market where Bitcoin is trading around $112,000. The CME gap at $116,000 is a valid point, as these gaps often get filled, but it's not a certainty. The idea of an altcoin season is a recurring theme in crypto, and with Bitcoin's dominance recently slipping, there's some evidence to support this. Ethereum is currently trading around $4,300, so reaching the $6,000 target would require a significant market shift. There's a lot of chatter about potential interest rate cuts from the Federal Reserve, which could boost riskier assets like crypto. However, the overall market sentiment is still neutral, and there's a notable amount of token unlocks scheduled for this month, which could increase selling pressure. Spot Bitcoin ETFs have seen significant inflows this year, indicating growing institutional interest, which is a positive long-term sign. In the latest video from Crypto Tips, the discussion kicks off with some serious economic warning signs. The U.S. unemployment rate has climbed to 4.3%, its highest point since October 2021. This is paired with a surprisingly low non-farm payroll number of just 22,000, far below the expected 75,000. The speaker believes a rate cut from the Federal Reserve is now almost a certainty and predicts that factors like AI could push unemployment as high as 10% in the future. As evidence of economic distress, he points to a spike in Google searches for bankruptcy lawyers and troubling national debt figures. The U.S. national debt is projected to hit $150 trillion within 30 years, a timeline the speaker feels is too optimistic given the exponential growth. Adding to this, U.S. credit card debt has ballooned from $0.88 trillion to $1.21 trillion in just 3 years, signaling that middle-class and lower-income families are struggling. The points raised in the video tap into some very real market anxieties. The latest jobs report showing only 22,000 new jobs and a rise in unemployment to 4.3% has definitely shifted sentiment. This week data makes the case for a Federal Reserve rate cut at its next meeting on September 17th much stronger. Markets are now pricing in a very high probability of a cut to stimulate the economy. This environment is complicated for crypto. On one hand, rate cuts can weaken the dollar and increase the appeal of assets like Bitcoin, which is currently trading around $112,000. On the other hand, the underlying economic weakness could dampen overall risk appetite. In the latest video from the Lark Davis channel, the main idea is that cryptocurrencies with token buyback programs are a hot trend worth watching. The concept is simple. A project uses its profits from things like trading fees to buy its own tokens off the market, which shrinks the total supply. When supply goes down and demand stays the same or grows, the price tends to go up. The token buyback narrative is powerful, especially in a market where investors are hunting for projects with sustainable economic models. With Bitcoin consolidating around the $112,000 level, assets that generate their own buying pressure are getting a closer look. In the latest video from the Ben Cowan channel, the discussion centers on Bitcoin's performance as it navigates the historically tricky month of September. Bitcoin is currently holding its ground just above the bull market support band, which consists of the 20-week SMA and the 21-week EMA. This support level is pegged between roughly $108,000 and $110,000. Cowan points out that while the low for the month could have already happened on September 1st, it's wise to remain cautious. He draws comparisons to past cycles, noting that in 2017, September saw a quick dip followed by a strong recovery, whereas 2020 and 2021 involved more sideways consolidation. Ben Cowan's technical perspective is particularly relevant right now, as Bitcoin is trading at approximately $111,000 to $112,000, just above the support levels he outlined. The market does feel like it's in a holding pattern, which aligns with his theory of sideways consolidation similar to 2020. His point about altcoins is also timely. Ethereum is hovering around $4,300, and the market sentiment for many smaller coins has been muted. There's a tangible sense of caution, with the crypto fear and greed index recently dipping into fear territory. In the latest video from Coin Bureau, Nick discusses the recent move by the U.S. government to start publishing key economic data on public blockchains. This initiative began after Commerce Secretary Howard Lutnick announced at a White House cabinet meeting that metrics like gross domestic product, GDP, personal consumption expenditures, PCE, and others would be made viewable on-chain for the first time. The stated goals are to enhance transparency, demonstrate the utility of blockchain, and solidify the U.S. as a global leader in the technology. The U.S. Commerce Department's partnership with Chainlink and PYTH is a significant step for blockchain adoption, even if the market's initial reaction was underwhelming. The muted price action for most of the 17 named cryptocurrencies, outside of a spike for PYTH, isn't entirely surprising given the current market sentiment, which has recently shifted toward fear. Bitcoin is consolidating around the $112,000 level, and while institutional interest remains strong, traders are showing caution with altcoins. In the latest video from the Cryptos Rush channel, the host discusses two main topics. First, he warns viewers about a significant JavaScript hack that targets browser-based crypto wallets. This hack uses a virus to change the recipient's address when a user tries to send crypto, making it look very similar to the intended address, but instead sending the funds to the hacker. He advises against making any crypto transfers for the time being. However, he also notes that major wallet providers like MetaMask have stated they are not susceptible to this attack, and so far, only a small amount of money has been stolen. The video brings up a couple of timely and important points for anyone in the crypto space. The JavaScript hack is a serious reminder of the constant security threats out there. While the immediate impact seems contained, it's a good wake-up call to always double-check wallet addresses before sending funds. This type of supply chain attack, where popular code libraries are compromised, can be particularly nasty because it can affect a wide range of applications that use them. The advice to pause transactions is prudent, especially for those less experienced in verifying transaction details on a hardware wallet. In the latest video from the Crypto Banter channel, the host shows a trading terminal that lets you trade crypto news the moment it breaks, aiming to give you an edge over the rest of the market. The idea is to act as fast as the insiders do, but in a completely legal way. This tool, which is similar to a Bloomberg terminal, but for crypto, scans news sources and lets you place a trade on a specific token with just one click. The host mentions he's been using it for 2 weeks with very profitable results. The strategy of using a terminal for high-speed news trading is a classic Wall Street tactic now adapted for the crypto space. The appeal is obvious. In a market that can swing wildly on a single headline, being the first to react can make all the difference. Automated tools and trading bots are becoming more common as they can execute trades without emotion and around the clock. The current crypto market sentiment is largely neutral, meaning it's susceptible to being swayed by significant news events, whether it's regulatory updates or macroeconomic data. In the latest video from Crypto Casey, the discussion centers on the beginning of a major altcoin season. Bitcoin has seen a pullback to around $18,000, but the overall market trend remains bullish unless Bitcoin closes a week below $14,000, according to a Moneyline indicator tool. Capital is rotating out of Bitcoin and into large-cap altcoins like Ethereum and Solana, which is a classic sign that altcoin season is starting. The video points to the Bitcoin dominance chart as a key indicator. It's currently breaking below the 60% level, a threshold that kicked off the 2021 altcoin run. The strategy presented is to follow the trend, remove emotion from trading, and consistently take profits. It's pointed out that crypto bull markets experience severe pullbacks, sometimes as much as 50%, even while the larger trend is upward. The video also touches on macroeconomic factors, noting that the Federal Reserve is expected to cut interest rates at the upcoming FOMC meeting on September 17th, an event considered bullish for crypto. This is based on predictions from Polymarket, which gives an 80% chance of a rate reduction. While September is historically a down month for Bitcoin, October and the fourth quarter are typically strong, setting the stage for significant market moves. The video's core message about an approaching altcoin season, based on a falling Bitcoin dominance and a bullish macro outlook, is a recurring theme in crypto cycles. The transcript mentions a Bitcoin price of around $18,000, which provides some distance from the current market where Bitcoin is trading at approximately $112,044. Ethereum and Solana are priced around $4,326 and $213 respectively. The Bitcoin dominance, Bitcoin.D, is currently around 57.5%, which is lower than the 60% level mentioned in the video as a key trigger, suggesting the trend identified has continued. Market sentiment, however, has recently shifted towards fear, with the Crypto Fear and Greed Index at 44 out of 100. This indicates a more cautious or risk-off attitude among traders who seem to be focusing on major assets rather than more speculative, smaller altcoins for now. The video's anticipation of a rate cut at the September 17th FOMC meeting aligns with current market expectations. Projections from the CME FedWatch tool, influenced by recent cooling in the labor market and moderating inflation, show a high probability of a 25 basis point rate cut. This potential easing of monetary policy could indeed provide fuel for risk assets like cryptocurrencies, lending weight to the video's bullish outlook for the remainder of the year. In the latest video from Data Dash, Paul Sampson gives a technical look at the crypto markets, suggesting Bitcoin might be gearing up for a big bounce. He points out that Bitcoin is holding in the $110.00-$112,000 range after getting a solid push off the $107,000 level. A pattern known as an inverse head and shoulders could be forming, which might send the price toward $118,000 if it can break through the $113,291 resistance. For Ethereum, the price action is a bit tighter. While a new all-time high is expected, he notes a potential dip to around $4,150 or even $3,900 could happen first to shake out some traders. The ultimate target for Ethereum is seen between $5,100 and $5,600. Solana is showing some real strength, holding the $196 support level firmly. If it stays above that mark, the next targets are projected to be $274 and then a new high of $323. As for XRP, it's described as a good asset for longer-term swing trades, with a personal target of $4.50 to take profits. Finally, gold is also looking strong after breaking out of a long consolidation, with a potential move to $3,661 and then possibly $4,000. The technical setups presented in the video are quite interesting when viewed against the current market backdrop. Bitcoin is currently trading around $112,100, which aligns with the video's observation of it holding key support. The potential inverse head and shoulders pattern is a classic bullish signal that traders are watching closely, but the resistance around $113,500 is proving tough to crack. There's considerable chatter about institutional demand picking up, with spot Bitcoin ETFs being a major driver of capital inflows throughout the year. However, there has been some significant selling from whale wallets recently, which could be a headwind. In the latest video from Crypto Windy, a major warning is issued to the entire crypto community. Stop all on-chain transactions immediately. The alert comes after the CTO of Ledger, Charles Guillemet, announced a massive supply chain attack on September 8, 2025. Hackers compromised the NPM account of a well-known developer, inserting malicious code into JavaScript packages that have been downloaded over 1 billion times. This code is designed to secretly swap crypto wallet addresses during transactions, redirecting funds to the attackers. The attack affects numerous cryptocurrencies, including Bitcoin, Ethereum, and Solana. For those using hardware wallets, the advice is to be extremely careful and verify all transaction details on your device before signing. If you use a software wallet like MetaMask, the recommendation is to avoid any on-chain activity for now. A security expert from MetaMask confirmed that while your crypto is safe just sitting in your wallet, performing any transactions is risky until websites and dApps confirm they aren't using the compromised code. The good news is that the malicious packages were identified and delisted quickly, and MetaMask has already flagged the attacker's addresses. The best thing to do is simply wait until the situation is fully resolved. This video addresses a very real and increasingly common threat in the crypto space, the software supply chain attack. While the specific incident described is dated in the future, it mirrors real-world events where vulnerabilities in widely used code libraries, like those on NPM, are exploited. These attacks are particularly dangerous because they target the foundational tools developers use, potentially affecting thousands of applications and users simultaneously. The market's reaction to such security news is often a dip in prices driven by uncertainty. Although it appears the current market, with Bitcoin hovering around $112,000, has not been significantly impacted by this specific event. Interestingly, while the potential scale of this attack was enormous, with over 1 billion weekly downloads of the affected packages, the actual amount stolen was reportedly less than $50. This highlights a critical point. The crypto community's security researchers and white-hat hackers are becoming incredibly fast at identifying and neutralizing these threats. The event serves as a stark reminder of the importance of hardware wallets and the clear signing features that allow users to verify transaction details on a secure screen, a defense that remains robust against this type of malware. While hacks and exploits continue to be a significant issue, with over $2 billion stolen in the first half of 2025, the industry's response and resilience are also visibly improving. In the latest video from The Modern Investor, the host points out that a huge wave of institutional money is flowing into cryptocurrency, a sign that the financial world is changing. The Royal Bank of Canada, RBC, has noticeably increased its crypto investment by boosting its holdings in MicroStrategy, a company that holds a lot of Bitcoin. This isn't an isolated event, it's part of a larger pattern seen over the last year with banks and wealthy investors across North America and Europe quietly buying up Bitcoin. The video's core message about institutional accumulation isn't just talk, it's a trend that has accelerated through 2025. The move by the Royal Bank of Canada is a prime example of how major financial players are gaining exposure, often through proxy investments like MicroStrategy or regulated ETFs. This broader institutional push is significant, with reports showing that 86% of institutional investors have or plan to allocate funds to digital assets this year. The creation of dedicated Bitcoin treasury companies like Amdax's AMBTS in Europe is the next evolution of this trend, shifting from passive investment to aggressive, strategic accumulation. With Bitcoin currently trading around $111,000 and Ethereum near $4,300, the market has shown strong resilience. While the video's price predictions are highly speculative, the underlying logic that a supply shock is brewing as hundreds of corporations and funds compete for a finite amount of Bitcoin is sound. The smart money isn't just dipping its toes in anymore, it's building strategic reserves for the long haul. In the latest video from Alex Becker's channel, he starts by saying he's selling all his crypto, but quickly admits it's just a hook for the video. The real discussion is about when and how to sell during this bull run to actually make a profit, something he claims 85% of crypto investors failed to do in the last cycle. He predicts the current market dip is temporary and will be followed by a rebound where Ethereum will skyrocket, leading into a broader altcoin season. Becker's framework for identifying a market top based on social sentiment rather than pure technicals has historical merit. Euphoria is a classic sign of a peak. His predicted market rotation from Bitcoin to Ethereum and then to large-cap altcoins is a pattern we've seen before. Currently, the market is showing some of these early signs. Bitcoin is trading around $112,187 after a strong run, and Ethereum at about $4,329 has shown strength, though it's currently facing resistance. The crypto fear and greed index is hovering in the fear to neutral zone, sitting around 44 to 50, which suggests we are far from the extreme greed Becker describes as a sell signal. In the latest video from CryptoJeb, the host explains that Bitcoin is at a critical point and will likely see a major breakout or a significant drop within the next week. The analysis centers on a bullish inverse head and shoulders pattern forming on the 4-hour chart, signaling a potential reversal of the recent downtrend. Bitcoin has already broken a downtrending line of resistance and successfully retested it as support. The main hurdle is the resistance zone between $112,000 and $113,000. If Bitcoin can break through this level, the price target from the pattern is around $119,000. This move would be very positive, as it would also push the price above the point of control, around $118,000, and the Fibonacci golden pocket, shifting market control back to the bulls. A major factor supporting a breakout is the upcoming Federal Reserve meeting on September 17th, where a rate cut is almost guaranteed. Lower interest rates typically encourage investment in risk on assets like Bitcoin. However, there's also a bearish scenario. If Bitcoin fails to break $113,000, it could form a bear flag with a potential downward target of $100,000. This could happen in a buy the rumor, sell the news event after the Fed's announcement. Despite this risk, the host is leaning heavily bullish due to the technical setup and the impending rate cut. Jeb's technical analysis from the video aligns well with the current market structure. Bitcoin is indeed trading around $112,000, pushing against a significant resistance area that analysts are watching closely. The idea of a decisive move being imminent is a common theme, with the market showing signs of consolidation before a potential breakout or further correction. The bullish case presented in the video, centered on the inverse head and shoulders pattern and a favorable macro catalyst, is quite strong. The upcoming FOMC meeting on September 17th is a focal point for the entire market, with the CME FedWatch tool showing a high probability of a 25 basis point rate cut. Such a move would likely inject liquidity into the markets, benefiting assets like Bitcoin. Furthermore, institutional interest continues to be a powerful narrative, with spot Bitcoin ETFs attracting over $100 billion in assets this year, fundamentally changing the demand landscape. The bearish scenario, a rejection leading to a drop towards $100,000, also remains a possibility and is echoed by other market analyses. Market sentiment has recently dipped into fear, with traders showing caution and rotating into large-cap cryptocurrencies, which could temper immediate upward momentum. Ultimately, the direction will likely be determined by whether the strong institutional demand and the effects of the April halving can overcome the historical tendency for September to be a challenging month for Bitcoin.